Hey everyone, welcome back to our channel. First off, go ahead and hit that subscribe button. Today's a very special episode. I am going to show you guys how I use DXY to spot possible market manipulations. What we're going to do is break down Friday, Monday's, and today's trades from the last 3 days. Now, these are all trades I obviously sent out to our signals group. Our VIP analysis channel got some of these trades given to them the night before where it was possible. But I'm going to show you guys the thought concepts behind US30 and gold trades and how I use DXY to basically go the opposite way of what most of retail would. Now, before we get into this, I want to explain to you guys what DXY is and how it works. Now, everyone's seen all the Instagram posts of Euro USD and GBP USD, DXY divergence and all that. The reason people use it like that is DXY is a basket made up of several currencies, basically anything XXX.USD or anything USD.XXX. So the way that works is Euro USD makes up about 57% of the basket, GBP USD makes up about 12% of the basket. So with those two pairs making up 67% of the basket, they generally go the opposite way of DXY. Now, the rule of thumb is this. If we have XXX/USD, so Euro USD, it's going to go the opposite way of DXY most of the time. If we have USD/XXX, so USD JPY, a lot of the times they're going to go the same direction. There's obviously other factors involved, such as fundamentals and whatnot, but eventually it'll realign and that will be the way it goes. So the DXY is a dollar basket. It's the strength of the US dollar. So the reason we use it is sometimes we see market manipulations on, I'm going to show you how I use it on gold and US30. So first off, we'll go to gold here and I'm going to show you Friday's trade. And actually, just before we do that, I want to explain something. So when you're talking with Euro USD and DXY, you can see the effects immediately. Like you can spot it on the 5-minute, you can spot it on the 15-minute, and sometimes those can be used as signals to, maybe scale into your entry via divergences or liquidity levels or whatever. That's fine. That works for Euro USD because it's over half the basket. When you're dealing with gold and US30, it doesn't happen immediately. Sometimes it doesn't even happen the same day. So when I use these signals on gold and US30, I look at it on the 4-hour and the 1-hour. I don't care what the 15 minutes doing. I don't care what the 5 minutes doing. It's just going to give us wrong signals. The idea is if DXY is going up, gold should be going down in some shape or form. Now, gold might be manipulating, it might be kind of going sideways, but the only thing I really care about is that we're consistently going down and we're making lows. I don't need it to be in perfect fashion like this. It doesn't need to be a mirror image of DXY. Whereas in the case of something like Euro USD, you want it to be an inverse mirror image for the most part. When you're dealing with US30 and gold, it just needs to be going opposite directions. All the highs and lows don't need to match at the same time. So I'm going to show you Friday's trade that we took based on the DXY. Now I ended up closing this out. I think we took like a 65 pip stop. I ended up closing this trade out at a 25 pip loss because I didn't want to have open risk over the weekend. But essentially, we shorted this. We shorted this from the top. Well, the idea didn't want to play out on Friday because gold was just kind of stuck in this New York range. You could see nonetheless that the idea was right and gold didn't go down. I'm just not willing to have an open stop over the weekend in case it has a big gap up. I'm good on eating that slippage. So we ended up eating like 0.3 of an hour for a loss or something. To me, that's risk well managed. Now Now let me show you how I came up with this trade and why I took it. So what we're going to do is find DXY in this same area. So I come to the chart at about 4 a.m., 4:30 a.m. So what I want you to notice here, let's just go one more. What I want you to notice here is what DXY is doing this whole day. Maybe we'll make this orange or something. I also want you to notice that gold is doing the same thing. Now, this is wrong. Something's off with this picture. This is not proper. This is manipulated price action at its finest. You know, if it wants to go the same direction for a couple hours or whatever, that's fine. This is going the same direction for, you know, the better part of a day and a half. It's a manipulation. So I would say 80% of the time, maybe even 90, if gold and DXY is going the same direction, that one of them's being manipulated. Most of the time, the dollar index is going to be the true direction, and DXY and gold is actually the manipulation. So with that in mind, I took this short, and like I said, after price wasn't really moving for like 3-4 hours, we ended up closing at a whatever it was, 23 or 25 pip loss, maybe even 20. Anyway, irrelevant. The point is the idea played out. It didn't play out till the next day, which is fine. But when this happens, I expect gold that at any point is going to have a pullback to make up for this bullish impulse. And it does. It just didn't do it right away. And that's what I wanted to say, is sometimes it doesn't happen right away. So here, like DXY is still climbing. So I'm making highs on DXY. Buy rates, gold should start making lows if the price action is clean. It doesn't do it, which is telling me this is manipulated. A lot of the times, price will move in your favor right away. Now, if it's US30, I would leave this trade, and I'm okay with it going sideways or whatever. US30 does that. It goes sideways. It can sit there for hours, and then it moves. With gold, if I don't get an aggressive reaction, or it just kind of sits in a range for 2, 3, 4 hours, I'm out. I'll take a half-hour loss or 1 hour, whatever. I'll close a partial loss out. I'm just not interested. I'll wait for another reaction. So we took this sell. Anyway, price didn't really do anything till after the weekend. So this was Friday. In the same context, so Monday we took US30. I didn't trade gold on Monday. So let's look at how US30 looked on Monday. So we actually bought US30 down here, and a lot of people were selling US30 that day. There is a few things that I'm going to show you towards the end of this video as far as price action and reading DXY and anticipating DXY and understanding where DXY is likely to go based on past price action patterns I've seen over the years of backtesting and years of actually looking at DXY. So you're going to want to stay till the end, because that's where the stuff will get a little more juicy. But I just want to show you the examples first. So we took a US30 trade in here. And this was once again based on how DXY was moving that day. Now this one's a little tricky. This one's actually quite a bit trickier. So this is what I had in the market yesterday when I looked at DXY. Now, a lot of people will look at that and they'll say it's slop, it's garbage, it doesn't provide any details, and it's consolidation. Now, while you're right, there is finer details. So, I'm going to show you guys something. So this is actually a confluence I use when it does present itself. It doesn't happen often, but it does present itself. So if we look at all these wicks, you can see how all these wicks are continuously reaching lower. So usually when you have wicks that are reaching lower, these are not rejection wicks. These are reaching. Price is reaching lower. Buyers are trying to beat out the sellers, but the sellers are basically just collecting a sell order. And ultimately, this is a good sign that price is about to push down. So on anticipation of this pushing down, I switched my bias on US30 from sells to buys, because we actually started the morning with wanting to sell US30. When I seen what DXY was doing, I realized this was a manipulation, and all of these guys are basically the target. And I'm going to explain that in a sec. So before I get too far in this video, I also want you to know something about the characteristics of DXY versus indices or gold. So gold and US30 can run inefficient for days, weeks, months, forever on it. It doesn't matter. The pairs don't care about being efficient. DXY most of the time will run efficient. It might run inefficient on weekly and not rebalance for a year, but on like the daily, the 4 hour, the hourly, most of the ranges will be efficient. So with that knowledge in mind, my anticipation of DXY right now is to come rebalance the range. So with knowing how DXY works, we took out a weekly high. At the bare minimum, we're going to take out a daily low. If I pair that with where I want price to come, that would be a hypothetical scenario of something that's high probability. So this same anticipation started for me yesterday. I used this same anticipation for the gold buys today, which heavily manipulated, which I'm going to show you as well. So with this in mind, now we go to the lower time frame. So 1 hour is about the lowest time frame I'd consider macro. Anything below that is not really something I'd pull details off for anything other than entries. Back to what I was saying. These wicks are continuously reaching lower, and you kind of create this channel. This channel is your liquidity in the buildup, and usually next comes the inducement. It'll be a short-term inducement, which will most likely rebalance, and most likely this is pre-built liquidity for future. So that's kind of how I look at it. So just by looking at this, we know that US30 is likely manipulating. So the next thing we have to understand is what kind of market conditions we're in and what is US30 showing us. So right off the bat, we could see US30's got a weak high. Any high or low that gets created really aggressively like this and really fast, they're weak. They're likely not going to hold. So this low's gone, and in my eyes, this high's as good as gone. That's just patterns I've observed over the years, and it holds true. Usually, if a low or a high is strong, it'll pull back, it'll create liquidity, it'll go back and forth and grab that liquidity. It'll have a bunch of reactive areas in the leg. These don't have any reactive areas in the buy leg or the sell leg, so this high to me is gone. So what we know on US32 is that right now the market's moving from liquidity to liquidity. I can anticipate that just by looking at how price has moved every time we hit a level of liquidity or a higher level, a higher time frame level of imbalance, price has essentially reversed. So you have a little imbalance here. I took this buy, price goes up. You have a little imbalance here. Price reacts, comes down. I believe there might have been 15 imbalance or something here. We actually took this buy. We did a trade recap. Again, price comes in here, reverses. This here, I didn't take the sell. I didn't see it till after. I think we traded gold that day. But this here also took out a bunch of unfilled orders, and you can see how we took out these unfilled orders. And we basically parked liquidity, took it out. We softened this low, which basically told us this low's coming down. So now, with all of this knowledge, I can look at this price action and understand that price is not trending. Price is going sideways and reacting from unfilled orders to unfilled orders, from liquidity to liquidity to liquidity to liquidity. And every time we take out liquidity, price goes the other way. So this is telling me that the expectation is price is going to do the opposite of what retail thinks. So our closest liquidity is here. That's the target. So these two wicks are relative equal highs. That's what we targeted. Now I need a level of liquidity to go up. In this case, we're going to use our good support and resistance friends. Nothing against them. It's just where retail stops lie. So you have one sweep, two sweep. I can buy this. We've manipulated retail lows. At the same time, there's probably guys on the 5 and the 15 minute that are probably thinking there's a break and retest and they can just continue riding this and go down. So majority of retail actually sold US30. We know based on this, price is more likely to induce and go down. And just to show you, by the way, I took this long before DXY took this range out. This was just on anticipation and building a narrative of what DXY was likely to do. So then DXY just melted. So we ended up taking that short before DXY even took that low out. Took the long, I'm sorry. So you can kind of see here, first manipulation of retail lows, second manipulation of retail lows. Usually once you have two, that's enough liquidity to go the other way. And all we really need is price to present an entry. Now, if we just read price action here, all we need is an entry. Lows are holding. We've generated enough liquidity. And hypothetically, we can look for an entry anywhere up this leg. I forget exactly where we took. Oh, this would have been the entry. So there's our level of unfilled orders, the imbalance, and cover the low, and a little bit for spread. And ultimately, we're just going to go to the nearest level of liquidity. Retail is going to try selling this whole time, but we know we're good till at least here. My initial target and my projections were actually here. Because this was counter and it was Monday, we actually closed this trade out early. This did end up going to our initial target, but that's fine. More about management when it comes to these types of trades. And ultimately, US30 just blew right through, took everybody out. Had I waited an extra couple hours, we would have actually hit our initial TP, which is fine. There's a piece of you that's going to feel like you should have been in that. Don't worry about that. You don't need to. It's totally fine. So that was the buy on US30. And like I said, we took this buy before this low went. So a lot of people will wait for this body break before they consider consolidation broken out. I've seen enough liquidity stack to know how inducement works. It doesn't pull back. And it induces people into the wrong side. So this is a higher time frame inducement. It'll take days to play out. But that is our liquidity cycle. So in the case of today, let's go to gold. And I'm going to show you how I bought gold. So I actually changed my bias on gold. I started off with a sell bias initially. And we actually ended up buying this. Hold on, let me look at my gold chart. Where did we buy? So we bought at 23.15. Okay, so we'll find the entry in a bit here. Now, we didn't trade the news, so basically the news happened and we scaled in after. The first thing you're going to notice is order flow is respecting on the lower time frame. So, to be totally honest with you, my first bias was to sell above the 50 of this leg, and that was based on just looking the rhythm we've created that everything's been reacting above the 50. So for myself, if I could fill all this imbalance, and I guess more of the 618 in this case, I'd be looking for a sell. Now, something to keep in mind is gold's been manipulated in the last couple of days. So Friday was manipulation. Monday was heavy manipulation. There was no real proper way to catch gold within our system. Even though I wanted to sell, it didn't sell off a level I was comfortable with selling from. And at the time, we hadn't established a rhythm, so this sell wasn't even possible for me. Had I held my trade from Friday, I likely would have closed this when we hit, I don't know, probably somewhere in this imbalance. Anyway, long story short, we didn't do that. I traded US30 yesterday, so this is manipulating 2 days in a row. Gold will manipulate for 2 to 3 days at a time. Back to what I was talking about before. Gold has order flow down. DXY has order flow down. In most cases, DXY is the true order flow. I would say, again, 80% of the time, 85% of the time, DXY is going to be your true direction. And gold or US30 would be manipulating. So when this order flow matches the order flow to the right, it's off, it's wrong, it's being manipulated. So when I observed this on the DXY, I went back to seeing if my DXY targets have been hit. So we took out a weekly. At the bare minimum, price is going to come take out the daily. So that's TP1. This is current price, by the way. TP2's rebalance this range. And if DXY does what it usually does, it'll go up, induce people, sweep people, maybe once or twice. And it'll usually take this low out 2-3 times before we see the liquidity get taken out. That's just how price moves on the DXY. And knowing that lets me know when gold's moving, when the price action on gold's clean and when it's being manipulated. Since Friday, gold's just being manipulated. There is nothing about gold that's clean. So essentially, we know right off the bat, we're going to go to the nearest level of liquidity, which for me was this high. So essentially, I'm looking for buys. It's that simple for me based on how DXY has printed. Like, this is not right. What we should be seeing is DXY doing something along the lines of this, and then gold doing something along the lines of this. The lows and highs don't have to match for time. What they do have to do is go the opposite direction. So they're not going the opposite direction. So once again, the news came out better. So this further reiterated that we could buy gold, or not better, worse for the US dollar, which further supported gold buys, and this kind of changed my bias completely and solidified my plan to buy. Now our entry was 23.15, which is actually this gap. These news gaps are unfilled orders. All you need is one reaction and you can take it. And I think this was our entry. So, bullish engulfing, you don't need to cover much. That's it. That was the trade. I don't even think I covered that, to be honest. So, this was the gold buy from today. Now, something I want you to notice is how gold reacted. So, I'm going to show you where retail got induced. And to be honest, I probably would have got induced today had I not looked at DXY, because I would have sold. So, looking at this now, there is probably some kind of support and resistance here, maybe supply, demand, order block, whatever, just order flow. We're just looking to sell from this range. And if you look at where price reacted, it reacted right around the area retail would sell from. So this here is your inducement, inducing people into the wrong side of the market. Now, if you look at what price did again, swept the highs, swept the lows. If you go on the lower time frame, which I'm sure it looked like a chalk or something, this area here, a large amount of sellers entered the market and ultimately tried to sell. Institutions might have even spiked the price to get more people to sell. This was a hard one to catch. You wouldn't catch it without the DXY. And like, to me, I told myself when I took this, I was like, if I lose this, it's a good loss. It fits the system. But this is a session manipulation trade, and you only catch these with the DXY. So with everything I showed you today, this will only work if you read price action. So if you can anticipate where DXY is reacted from, where it's likely to go, and why, you can anticipate what gold and US30 might do. Like, some days I have an idea for US30 and I won't touch it because it clashes with the DXY, or vice versa for gold. So I try to pick the pair that makes more sense and correlates inversely with the DXY. Some days that's not the case, and I'll either sit the session out or wait for something else to present. So with this in mind, again, understand how the DXY moves. Understand that if you look at DXY, it runs efficiently. So with that knowledge, the anticipation is rebalance, impulse, rebalance, impulse, rebalance, impulse, rebalance, and then now you have impulse, the expectations, rebalance, and wipe all of these guys. Provided the fundamentals come out mixed, it's going to be really hard to be one-sided, so you got to stay more open, and you got to really read the technicals. When it comes to reading technicals, I trust the DXY because it is less likely to manipulate than US30 or gold. If our technicals in the next month all come out dollar bearish or dollar bullish, you don't need to look at DXY as much, as gold and US30 will manipulate a lot less in that case. And at that case, you go in a direction of fundamentals. We don't have that right now. Right now, the data's mixed, so I rely heavily on DXY, which is the case for most summers. But yeah, I don't want to bore you guys any longer. That's kind of the quick and easy version. So understand where DXY is heading based on patterns that repeat. And with that anticipation, you can anticipate what's higher probability on gold or US30. And basically, this anticipation allows you to know if a pair is likely being manipulated. So manipulations for one of two reasons. They need more liquidity for a couple of days, or the institutions didn't get enough orders in where they'll spike price down if they want to buy more. And this will be the inducement and the manipulation, which is really them just wanting more positions at a better price. So these are a bit tricky. This is kind of more advanced trading, and if you can't read raw price action on the 1 hour, 4 hour, and daily, I wouldn't even advise using this concept or using the DXY, as you'll more than likely just confuse yourself. But definitely a little more advanced, but it definitely helps you spot session manipulations. And if you want to get into bigger trades that you want to hold for a day, 2, or 3, that's going to happen when your fundamentals and technicals align and when DXY is heading inversely all at the same time. Those are the trades you can hold. But yeah, I hope you guys enjoyed this. Again, if you haven't subscribed, definitely do. And I'll see you guys in the next one.